welcome to the channel. I'm going to have a quick look through Manchester United's financial statements from the third quarter of 2022. Obviously, you've got quite a lot of positive news because most limited companies like to put the positive news at the top, and when you get down to the bottom of the accounts, you can see the real news essentially. So obviously there's the appointment of Ten Hag, there's where the men and women's team finished, there's information about the master planners, information about record membership. But if you forget that for a moment and we actually look through down the actual accounts, you'll see that the important part is going to be the numbers. So if you look, United made an operating loss of 21.8 million. Don't confuse that with the EBITDA number, which is adjusted, which stands for earnings before interest, taxation, depreciation and amortization. And bear in mind, United pay interest, which is the I in that number, and obviously that's a pre-tax number because that's before. So technically they lost £21.8 million. Obviously here they're making quite a bit of the fact that matchday revenues are up 2,000%, obviously because COVID, the period in 2021 there was very little because of COVID, and now there's 35.7 million in that 3-month period. I think that a statistic or something that fans should be really worried about is this debt figure. So the debt is at 591.5 million. It's basically the same as when the Glaziers carried out their leverage buyout of Manchester United. Obviously they can say we've got cash cover, so they've got £95 million in cash, but the debt, as you can see, is up 12%. So the debt's up 12%, and that figure seems to be going up and up and up. And obviously the net debt figure is the one which is quoted, but I really think that the gross debt figure, the current and long-term borrowing at £600 million, is actually quite a lot. And if you look at note 2, it says this change relates to a drawdown of £100 million on our revolving facility, and this will be very similar to a person who has an overdraft. The business has an overdraft, and United have chosen to draw down £100 million from that overdraft function, obviously costing interest. There'll be an interest attached to that. But yeah, that's something which a lot of fans should be very, very worried about. Now, another thing that jumps out at me, and I think that fans who are expecting a big blockbuster summer of spending from Manchester United, they really should temper what they think. Oh, here it is. So if you look what's mentioned in the account here, UEFA financial sustainability rules effective of July 2022 will ultimately include a 70% cap on men's squad costs. So I think that cap relates to the percentage in relation to your turnover. And obviously Man United have got a relatively high turnover, but this implies that United are going to be very, very frugal in the transfer market, and fans really shouldn't get their hopes up in relation to lots of signings and, buying 5, 6, 7 players. Now, United can amortize those costs or depreciate those costs over the course of a transfer, contrary to what people think. If you buy someone for 100 million on a 5-year contract, you're generally going to pay the club that you bought that person from £20 million a year over 5 years, and then it's going to be amortized, and then their wages will be a business expense. They also interestingly mention the UEFA, the FIFA football agent regulations, and again, it implies that United are probably going to look to spend less on agency fees, which isn't a bad thing, to be honest with you. It really isn't. We can't really think that it's a good thing that agents, especially if you look at the Paul Pogba deal that took him to Manchester United, Raiola reportedly pocketed 30 to 40 million pounds for that. And obviously they've got other stuff about broadcasting, and broadcasting is something which United, without Champions League football, can expect a reduction next season. The broadcasting revenue from the Europa League is obviously much, much lower than the Champions League. And there was also a little bit of a mention of the dividend that's still being taken by shareholders. Bear in mind the Glaziers own 90% of Manchester United, only 10% of the share capital is actually on the New York Stock Exchange. So 90% of those dividends are going to the Glazier family and the various brothers and sisters who seem to draw down their dividends and not really know too much about football. And obviously United make a big thing about their global 1.1 million fans and the heritage of Manchester United. And there's also a cautionary statement here about COVID, that the government could potentially lock down again in the actual, if there's another outbreak of COVID, they can lock down. Obviously, at the moment, the government of China has locked down their economy quite a lot, and they're warning that could continue. And I think it makes really, really interesting reading, because obviously fans who are not financial experts really want the club to buy players to make sure that Man United are competitive against Man City, against Paris Saint-Germain, but these accounts point to Manchester United being very, very frugal in the actual sort of next 18 months. These accounts don't jump out to me that United are going to be spending huge amounts of money. And I think an interesting one here is the finance costs. So the finance costs for the quarter were £17.6 million. There was a little bit of income there from finance income, which I'm really difficult for me to know what that relates to. But basically, you're talking about £14.1 million leaving the club in interest payments and refinancing costs, and that may relate to the £100 million that was drawn down, probably on a revolving basis, maybe at an interest rate of around 5%, 6%. Another thing also that fans should really worry about is that interest rates obviously affect, us. If you've got a mortgage and you've not got a fixed mortgage, then your mortgage payments will increase. This is also the same for Manchester United, who are borrowing money on a revolving basis. Their interest payments, if you look at what the Federal Reserve are doing, raising interest rates, the Bank of England, because of inflation, are looking to raise rates. That trend looks like it's against Manchester United, because what that'll do is it'll eat into your free cash flow. So this £14 million is going to eat into the free cash flow. And if you look over the 9-month period here, you've got £31.2 million, which has actually left the club in that 9-month period. Again, potentially interest payments. Also, when you borrow money, sometimes the bank or financial institution charges you a fee for that. You might charge like a £5 million fee if you're going to borrow 100 million and wrap up some interest front loaded. So this is obviously interesting. So if we look also, if we go through the balance sheet as well, you've got non-current assets, and the big one is going to be here, and it's going to be intangible assets, and that's what they're valuing Manchester United basically to be worth, and that figure is pretty much seen as being the goodwill inside of the business, and it is intangible. So that will be an accountant. That'll be an accountant that places a value upon what they think Manchester United is worth. Again, it is intangible. And as I say, if you go down, you see that United are cashed up, 95.7 million. partly due to that drawdown of cash, which, as I say, has got an interest figure attached to it. And as I say, if you go through the accounts, there is actually here an interesting one in relation to contract liabilities, deferred revenue. So I think that's going to be probably 1 year of player contracts, essentially. Maybe a 6-month period or a 3-month period, to be honest. It's probably the 3-month period, to be honest. £140 million is the liability in this period. So yeah, you can see, as I say, that increase in borrowing is 102 million, and I think maybe the 2.29 million will be the fee, and United get the 100 million and then at a rate of interest. So if you go down as well, you can see, as I've said before, there's a net outflow of cash. So the business is actually technically losing money. Now, all businesses at the moment say it's due to COVID, but as I've shown you above, a big part of this is the interest payments that Manchester United have to pay on a debt that hasn't really given Manchester United anything on the other side of the balance sheet. So if you borrow £200,000, buy yourself a house, you've got a debt of £200,000, but you've also got the house. Manchester United incurred a debt of £600 million. The club itself didn't get anything. The Glazier family got the club and the debt went onto the club. So technically, the balance sheet is a little bit imbalanced, and they've still not, in a 17-18 year period, looked to actually pay that figure off. The debt within which they purchased the club is still there. So that's basically the top and bottom of the accounts. To recap quickly, the debt's going up. Don't be fooled by the net debt. United owe almost £600 million. They're quoting the 70% rules in relation to wages and affordability in relation to revenue. And as a financial set of results, these are not good. Okay? And that's why the Glazers will be desperate maybe to get Champions League, because next year the figures will be even worse without Champions League money, without those home games and Champions League, which are more expensive for fans and generate TV revenue, prize money for advancing in the Champions League. So you're talking about maybe next year another sort of £150 million without Champions League money.